Hey, this is Andy. Just wanted to talk a little bit more about real estate. And, some things to kind of think of. And I know, I see a lot of things on YouTube on articles and how everyone thinks that the real estate market's going to crash. I just want take some things into consideration when you think about real estate. So I know a lot of people who are purchasing real estate, and I know a lot of people who have sold real estate recently. This is in Colorado Springs. I know our market's pretty hot. Days on the market, inventory, everything is extremely low in terms of inventory, less than 1 month. But the sellers right now, they are receiving multiple offers, and sometimes it's in excess of 20 offers on a single individual house. Homes are going well over asking price. Some of them are $30,000, $20,000, $40,000 over asking price. So one thing to consider is when you're a seller, and this is kind of just something about the free market, is the sellers that are selling these homes, they get to choose what offers they have. And those offers are sometimes, you'll get different offers where you might have a higher offer in terms of price, but they're putting no money down, and there's a large risk that offer may never materialize for the sale of the house. So what I'm seeing with the sellers is they're going to choose the highest quality offers on top of a very good offer. So what that means is you're going to have offers with 20, 30, 40, 50% down, or all cash offers, whatever it may be. And they're choosing the higher quality offer. That's the free market is choosing the higher quality offers to ensure that they close on the house when they want to close on that house. I don't think we can go from the current state that we're in today directly down to a 20% decline in real estate, because the free market, which is just a bunch of people, they're taking the highest quality offers, and they've been doing this for the past couple of years. So that means that the past couple of years, people who are in these homes in multiple offer scenarios, at least in Colorado Springs, the entire time they were choosing higher quality offers. I don't think you're going to have a huge flood of foreclosures come on this market. One, why would they decide to foreclose on the house if they're already up on the house? Why don't they just sell the house? That seems like a perfectly logical scenario. And if the free market is choosing the higher quality offers, that means that people are putting money down. They might have 15, 20, 30% of equity, or 40 or 50% in their house already if they've only owned it for a couple of years. Why would they foreclose? What would be the driving factor to plummet this market? And all of the people who did lose their jobs, and we went off, I work for an aerospace company. We had layoffs. Those people who were laid off either didn't own homes that could not afford them, or the ones that could afford them, they were close to retirement, and it's going to be no difference to them in terms of being able to afford the house that they are currently in. So of the people that I know of, there isn't going to be many people who are going to go into foreclosure or have problems with their home. So, keep that in mind if you're looking at real estate. We're in a middle of what I consider to be an upcycle. Foreclosures are literally down, dragging at zero. All of the metrics that we use to evaluate real estate are showing that real estate's going to go higher. Now, will it slow down because of COVID and all of the bankruptcies and people who have lost their jobs? I'm not 100% sure. Plus, COVID has, we'll call it like secondary and tertiary, we'll call it actions because of COVID, where people are relocating throughout the United States. And they're moving from higher tax, less desirable areas where they were there just because of their job. And now if they can work remotely, you might see people moving to different locations in the nation. Ones where those people see it as more desirable to live. So now what I think might happen looking forward is those really low-cost states, ones with low property taxes, low state taxes, sales taxes, and if they have a nice area to live, with those lower taxes, those might be some pretty prime spots to buy real estate in immediately. And then you're also having to look at the response that the Federal Reserve has had. They had lowered interest rates to zero, which resulted in very low mortgage rates. And you're not going to get a great return in bonds right now, right? So what do you think those people are going to do that own a bunch of bonds? And that's a gigantic market in comparison to stocks and real estate. I mean, there's so much money in the bond market. That money's going to go somewhere. Where is it going to go? Do you think they're all going to just dive out of bonds because they're scared of the stock market? No, they're going to go to something else. They're going to go to probably precious metals and real estate. And if everyone's going to start working, well, not everyone, but let's just say some people, a higher percentage are going to be working from home. Where are those people going to live? Where do you think they want to live? And in the comment section down below, put down where you think that people are going to migrate to. I chose Colorado. It's got very low property taxes. I think it's 0.56% per year. That's extremely low. Probably bottom 5. And we have low, state taxes. So I chose, a great state in my opinion. It's extremely sunny. And if I was working from remote, I'd choose a state like Colorado. And I think a lot of people are doing that. And you're going to see, property prices go up quite dramatically. And you also have to think of, where are companies going to go? And this is even a little bit deeper, is, as a crisis occurs, they're going to have to inflate their way out of this. Because if you have deflation and you look at the effects of deflation on tax collections or tax revenue for states are going to go bankrupt because they have all this unfunded pensions. So you have to think about your investments. What are they going to do if they run into tax revenue problems? If they run into pension problems, if they run into all this stuff, they're going to have to tax. They're going to have to tax people more, and especially if their tax base is decreasing, like New York. I mean, I think they're going to have a pretty rough time. But keep that in the back of your head when you're making your investments. Of if they get desperate and they're going to tax more and take more, how can you preserve your wealth? And I'm not saying real estate. Real estate's a great spot to be, I think, but they can tax it. They can tax it more through property taxes. But precious metals, I think that's going to be a difficult one, and it's in cycle. So, I'm a big precious metals bull, obviously. So that's what I wanted to touch on. A little bit of real estate and how I think real estate will be a pretty good bet going forward, especially if they're going to try to save the stock market. They're just going to keep rates low. So that's just fuel to the fire. If you like what you're seeing, I appreciate if you can subscribe. And if you want, more videos like this, I'm going to keep producing them. And if you have any suggestions, please leave a comment about maybe something that you want to hear and my opinion or take on it. I'd gladly touch any asset class or anything. And even if you have questions about precious metals and how to purchase them, I can create a separate video. And I can show you, if you want to see them physically through this, I can show you what they kind of look like and how to detect fakes or whatnot like that. So, appreciate it. Thank you for listening. Bye.